Hello and welcome to the latest in our live debate series, Mortgage Strategy Wired, in association with the Value Exchange. Today's topic is the importance of mortgage protection. Mortgage brokers work in a fast-changing sector, and while most are excelling at navigating these changes, dealing with a market of increasing specialisation and complexity, in many cases one enormous source of potential revenue is being skipped over: mortgage protection. The questions I hope to find out the answers to today are why, what and how. Why it's so important that mortgage protection is discussed with clients in the house buying process, what the resistance to bringing it up is, and how brokers could be incentivised to move into the lucrative world of protection. Today my guests are 177 Mortgages Katie Pisanu, Protection Sales Director, the Buy-to-Let Business's Head of Protection Jon Nixon, and Coreco Brand Director Andrew Montlake. Let's get started. So, why is it so important that protection is discussed with clients in the house buying process?
I think there's quite a few aspects to that answer. The answer is, firstly, we've got a regulatory responsibility. When we talk about regulated mortgage contracts, there is a regulated responsibility that we talk to all our clients about protection. And when I say about a responsibility to talk about it, what I don't mean is we just ask our client if they'd like life insurance, right? It's not as simple as that. We've got a responsibility to be well educated as brokers, as businesses, to help our clients make an educated decision as to whether or not protection is right for them. So I think the regulatory piece, first of all, is something that's really, really important. Secondly, I think that we've got a duty of care to our clients, a duty of care that whilst we get them into this big debt, whether it's a regulated mortgage or non-regulated mortgage contract, to help them understand the pitfalls or the circumstances where they didn't have any protection. It's a very complex world, protection, and we need educated advisors to better guide our clients through it, to at least give them the opportunity to say no. And I think as businesses, as brokers and advisors, we've all got a duty to better give our clients that sort of advice. So it's important from a twofold, for a duty of care, and I think from regulatory, pretty simple answers.
I think a lot of clients don't really understand the implication of not having protection. Like we were saying earlier, you know, they don't appreciate that, oh, actually, if it is a buy-to-let mortgage and it's one applicant but it's husband and wife, if the applicant actually passes away within the term of the mortgage, they might just assume that it will automatically get passed on to the remaining spouse, but actually they're not receiving an asset, they're receiving a debt unless there is protection against that mortgage. So I think that's another kind of thing to consider with clients as well.
It is. I mean, a mortgage contract and a buy-to-let in the past would have quite often been considered just being passed over, provided the rent was more than the mortgage payment, right? You qualify for it, so you pass an asset. It'd be probably it's a going concern. Those days have long gone. Regulation and the changes, the criteria, absolutely.
Horrendous.
Passing on to a non-qualifying spouse or non-qualifying children would mean that asset's going to diminish, right?
Yeah.
The hard-working growth within that estate, the equity within that property, the inheritance tax liability, for example, lots of other things need to be considered. And I don't think clients are equipped well enough with enough information, and that's our responsibility.
You've got, let's say, first-time buyers, for example. You know, the majority of people who buy properties, they buy with a partner, and they use both incomes to buy that property. Usually, it's based on affordability of both of their incomes. What they don't then appreciate is if one of them passes away, they have to tell the lender that that person's passed away. Is it going to fit on one person's income alone? Possibly not. So how are they going to be able to remortgage that property or put it into their own name if the affordability is not there? So that's, again, when life assurance comes into play, you take away that risk and you provide them with that security.
There's a massive education gap where protection is concerned. There's actually a massive education gap where mortgages and what mortgage brokers do are concerned generally. But protection is something that a lot of people feel very blasé about. I heard a stat the other day that 65% of people who have a mortgaged property don't have any kind of life insurance. I mean, that's crazy. And going back to what you said about the duty of care, that's absolutely right. We have to be better than that. We have to educate our clients properly as to what happens in certain circumstances. We do some education seminars for first-time buyers, and one of the first gasps we get is that they don't actually realise that the loan is secured on the property. So if they don't pay the mortgage, their home is at risk. So that's sort of the level of education that's out there at the moment. and protection has to be brought into play to fill that gap, so that they're not left wondering what's going to happen if their partner dies or they're unable to work and their income disappears. So we have to follow through and talk to them about it properly, not just as a passing mention.
Okay, so moving the focus slightly away from the borrower and to the brokers, why do you think that there's a resistance to brokers bringing up protection when they're dealing with clients?
God, we have this problem all the time. I honestly think the protection market is forever changing. It's far more complex than it used to be. Unfortunately, you have quite a lot of old school mortgage and protection advisors who historically didn't have to recommend protection. It wasn't a big thing 10, 15 years ago. So you've got those old school advisors that have never used it in part of their process. Therefore, the classic saying, can't teach an old dog new tricks. They haven't been able to bring it into their fact find or recommendation or application process with the client. I think the other key problem is too many advisors out there do not understand protection products. They don't understand how to sell protection. They find it difficult. You know, when a client is transacting for a mortgage, it's because they've come to that advisor for mortgage advice and they think, oh, selling protection is too hard. It's an add-on. I don't want to come across pushy. What they need to actually realise is they're not doing their job unless they highlight the need to the client, unless they explain the benefits to the client, unless they know how to overcome objections, and most importantly, the product itself.
It becomes an objectional point of view, though. If the broker themselves misses that opportunity to signpost to the client, it shouldn't be, I'm transacting for my mortgage, right? It should be my mortgage and protection. It should just form part and parcel of every single conversation. The client shouldn't go into a mortgage application thinking that that's not going to be part of it, which is a big education piece that I think we've learned in the buy-to-let business. We do educate our clients all the way through the journey.
Absolutely.
Yeah, absolutely. And I think the complexity, as you touched upon there, going to, let's say, an online company, and the client puts in a basic level of income protection, for a very simple defer period, you get back 60, 70 options. And the client shouldn't be left there with an option of trying to pick out or pick through the mess of that. We as advisors...
occupation,
work
tasks,
age-costed benefits.
Limited payouts.
And that's part of the problem. So, I mean, we're actually a broker. I don't think anyone will mind admitting who are very bad at it. We're very bad at selling protection. Part of that is actually you do have to sell protection.
Yeah.
You're right. People come
Sell
to
the
you for
need.
mortgage advice, and that's an advised basis. But then you actually have to, the art of selling, the art of disturbance techniques, all of that seems to have gone as products have become a little more complex. We used 74 different mortgage lenders last year, and it's hard enough to keep up with the criteria from all of those. So to then say that I'm also a protection specialist as well is very difficult. So I'm happy to speak to people about it and set it up for a specialist. We now outsource most of our protection sales to a protection specialist who knows all the changes. They know that Aviva will do this or Royal London will do that, etc. And it works much better. So I'm the mortgage expert, and then I'm putting them in the hands of a protection expert who'll be able to guide them through that process. I
think you're right. I think in the hands of specialists, so creating a specialism out of protection, I think really works very, very well. Mortgage advisors are great at mortgages, right? Yeah. They're very, very good at mortgage broking, and do you know what? I think if you look upon how busy they are, how complex that world has become, how much information's out there to try and get through the client, how long the process takes, I think there's a fear also of adding on protection into that journey to make the client feel a little bit like it is an add-on, like you're right, because they're not equipped necessarily with the knowledge to do that.
But surely obviously at 177 we have mortgage and protection advisors, and then we have protection specialist advisors. But the first port of call is for that mortgage and protection advisor to sell the best mortgage to that client, then provide the best protection solution to that client. And the reason we like to do it that way is because that client is engaging with that advisor. They've built a rapport. There should be that element of trust. So primarily, that's how we want to sell the protection. And a lot of our clients do transact on that basis. But then obviously we go to the protection specialist if that advisor hasn't properly sold the need and sold the product. But I think it's just, it is truly down to the complexity of it. And unfortunately, people don't enter into a conversation willingly about something they don't know anything about. And that's the problem we have nowadays, I think.
I see. So the next question I'm going to ask then is, how do you think that we could incentivise brokers to start moving into protection, if that's the right terminology to use?
I don't think it's the right terminology.
I was going to say, I think incentivisation is completely wrong.
Yeah, I agree.
Anyone who's had a client die on them,
Yeah.
that's incentive. Anyone who's had a client who's had a heart attack or suffered a critical illness and then phoned up and asked about their cover, only to be told that it's not there, that's where the incentive lies. The incentive has to be doing the best for your client and advising them correctly. I don't no longer actually sell protection anymore, but I still talk to the client about it and I tee it up for a specialist. I remember ages ago I had an example of a wife who had just got married. They were young. They went on their holiday together, and he went out on a surfboard and never came back. Phoned up and said, "I'd just like to, tell you the situation. This is very sad. Can you tell me about the life insurance?" And I looked, and there wasn't any. Luckily, I'd covered myself and had actually had an email from him with my quotes on, saying that actually he didn't want it. But that's a really tough conversation to have. So you have to do what's right for the client. Being incentivised.
I
Do you
completely
know what?
agree with
Really,
you.
we get paid to do a job.
Yeah.
The commission is adequate to do our job, but there shouldn't need to be any more incentivisation, rather than you're sitting in front of me, you've got a young family, I need to make sure that you're protected, otherwise I'm not doing right by you.
I completely agree. And actually, I think, like you say, the commission to sell protection is good enough. We should be protecting our clients. For example, if my brother was about to buy his first home and him and his girlfriend were going into it at 4.5 times income, at 85% loan to value, the first thing I'd be saying is, come on, Jonathan, you need to consider, what if this happened? Obviously, you're relying on your income to pay the mortgage. What would you do if all of a sudden, he's a plasterer, he's self-employed. What if he injured his back? How's he going to be able to pay that mortgage? And I think we need to treat our clients with the respect and care that we would also offer to our family members, our best friends, sat around a dinner table. You wouldn't leave them exposed, so why would you leave your client? We're meant to be looking after these clients, and I think we have a responsibility over and above incentivisation to make sure that we don't get that phone call. I mean, we've all had that difficult conversation with a client, or you've rang them in 2 years' time to remortgage and one of them's died, and you think, oh my God, how's this happened? Have they had life insurance? Thank God I did. I arranged a policy for them. And I think that's the key thing, is that we need to treat them with respect and care.
Yes, incentivisation, the commission that's paid off the back of a protection sale, is secondary to the advice. I completely agree.
Yeah.
I think we need to get to a stage where we're allowing our clients an opportunity from an educated perspective to at least say no.
Yeah.
We've done our job then, right?
Absolutely.
We need to ensure
Absolutely.
that they understand every aspect of it.
Yeah.
And we're not going to win every battle, are we?
No.
But we're going to win a lot less battles if we don't put it in front of every single one of our clients. And I think those advisors that are choosing not to do it, I don't think incentivisation is actually going to make any difference to those. They just need to have a good look at their moral compass and understand, is this the right thing to do for my client? Treat it like a brother or sister.
Yeah.
Treat that conversation like a brother or sister, or draw them back to a scenario where that's happened.
And if it's not them who do it, at least set it up for someone
Absolutely
else.
right.
At least refer them to someone else. That's really important.
Interesting. Okay, well, we have a question from somebody who's watching. It's quite a long question. Somebody called Adil, hello, After the last PPI claim date has passed, do you think there will be a focus on cases where customers who needed mortgage protection but weren't recommended to do so by their advisor? And could this become the next big push by claims companies encouraging people to complain where a protection recommendation should have been made but wasn't?
We don't have that issue at 177, and I can guarantee that every single client we transact with has a discussion around protection. Like Jon said, we actually give them the opportunity to say no, but we make sure it's included in the initial fact find, then at point of recommendation, then at point of application, then at point of offer. If at that point we've still not transacted with protection with them, it then goes on to our specialist protection department to pick it up and have that conversation. If that conversation then turns out to be a no, we send a no protection letter to that client to cover off this kind of situation happening in the future.
I think it's definitely something that you will see as PPI dies out. These companies will be looking for various other things. Anyone who's had a phone call, just a random phone call, have you done this, have you done that, have you had an accident, etc. So I think this is a very real one as well. If you haven't got your documentation in order, if you haven't shown you've at least discussed it, then you leave yourself open.
But the client would then have the right to be asking why not, because it's, like we said earlier, we all have a responsibility to them. So I think if this is the next claim to go forward, then so be it. I think clients would be entitled to compensation if they haven't been adequately protected, or at least had the opportunity to say yes or no.
We are in a complaining culture now, right? And this is a bit of a trend that started, I think. It's got quite a bit of momentum on it. I think any advisor that leaves himself falling short of giving that advice leaves himself open to this next run of claims. And I've got no doubt, I agree with you, Andrew. I think there is going to be that run. There is going to be somebody out there that's going to kick up a fuss.
But maybe it will give those advisors the shake-up they need.
Well, it'll be the first claim that will actually make people's attention spike, won't it? Absolutely. But I think the key thing here is just everybody needs to understand, as brokers, as businesses, as mortgage brokerages, we need to understand that our clients aren't equipped well enough to understand even their own circumstance. I mean, how many conversations have you had with a client where they truly understand their sick pay from their employer, they understand how quickly their savings are going to run out, and understand how an asset's going to be passed on with a debt? I've not come across one.
Don't, do they?
I've not come across one.
No.
I mean,
Is it their job to understand that?
No, it's our job to educate them. Of course it is. And that's the problem you get certainly in London is that some of the benefits from most of the companies in London, certainly the big banks, they're fantastic. Yeah. They're excellent, but it's having that conversation. Yeah, but it's having that conversation. If you move, what will you do? Yeah. Actually, is that really adequate? And just having all the soft facts that make face-to-face advice or telephone advice or actually communicating better than just filling out an online form. That's where you really engage with the client. That's where you really understand their dreams and their aspirations and where they're going, and that's how you build a client for life.
I think many of our clients aren't exactly what we consider as time rich either, right? We've gone from a regulated mortgage process that when you used to go into a bank probably half an hour, 40 minutes, right? To now 3-4 hours in the bank or a couple of hours over the phone. I think that the providers of protection have got a bit of work to do in trying to make that as fluid as possible, to spend as little amount of time transacting once a decision should be made, because some of that can go down to it taking 2 or 3 months to get a doctor's report back, for example, GPR, nurse screening, so on and so forth. There needs to be a far more inclusive conversation with all of these parties that are involved in it to ensure that once we get that client to that stage, it doesn't then fall out of bed. The client doesn't get bored of this conversation, that it is still transacted in a nice, timely manner.
I think you picked up on providers there, and I do think that one of the biggest problems we have in the industry is the products themselves and the providers, and how the products are marketed, how it's all paid, how their claims experience, etc. I think there's a whole lot of work to do to modernise the type of products. Some have done a lot better than others, but I think if I hear the widow's story one more time. I think I think my wife will be one. But there has to be a different way. People are changing. People don't want to hear the same old sales techniques of the past. They are more intelligent. They are more adept. So I think the whole industry really needs to come together to think about this, because protection sales have been declining generally, and I think the insurance companies do have a responsibility to try and modernise themselves as much as possible.
Okay, we've got 10 minutes left, and I've got 2 questions I'd like to ask, and one which is more of a statement. So let's see if we can get through them. The first question. Do you think that income protection is more important than critical illness cover? And then that's followed by a compliment to one of us for our clothes today. I won't say who. So, yes, do you think income protection is more important than critical illness cover?
Yeah.
Definitely.
Income protection is more important than critical illness cover. Discuss. Do you know what? I would be a little on the fence on that, because it does depend on the person and on their circumstances. Both of my parents died of cancer, so I'm a big fan of critical illness, because I've seen how it's worked, and they were fine where income protection is concerned. And it depends what job they're in and at the time. So I would be more of the it depends rather than a definitely one or definitely the other.
It does come down to knowing your client, definitely. I've had a critical illness payout for my baby girl, and so I completely understand how amazing critical illness protection is, and I couldn't be a bigger kind of advocate for critical illness. My only kind of concern is the majority of our clients rely on their income. The majority of people in the UK or all over the world live hand to mouth. They rely on their monthly income. So whilst ideally you'd want them to have income protection if it's needed and then critical illness on top, so they're covering all eventualities, if they can only afford either or, and let's say they don't get any sick benefits with their employer or they're self-employed, then 100% I think income protection is more important. But again, it's just about knowing your client.
And ironically, actually, income protection is the least sold.
I know, I don't understand that. I
It's
really don't
crazy.
understand the amount of people.
And going back when
that.
I did used to sell quite a lot, that was always the first sale, to be fair.
I think it's the easiest thing to explain to a client as well.
Yeah.
And it's so black and white. If you are signed off work, you can receive a monthly benefit until you're well enough to return to work.
The protection sales process should start. That should be the first product you underline or draw a line in the sand with the client is income protection, because that's the most likely event to happen. But I agree with Andrew's point.
1 in 3 times more likely to claim on income protection, and 1 in 12 on life assurance. Yet everyone goes to life assurance first.
It's cheap. It's low-hanging fruit. It's the easiest sell, right?
Life
It's going to
insurance
happen
is
to
a
all of
low-hanging
us.
fruit.
It's going to happen
And
to all
it's
of
the
us.
one that's definitely going to happen.
But I think they should complement each other. I think to go back on my point of saying yes, income protection is more important. In most instances, it is. I think that's where my answer comes from. But I think they should complement it. They shouldn't be exclusive. I think you should complement each product.
Multi-benefit policies.
Right.
Yeah, which goes back to a more modern type of product that actually appeals to everyone and covers things like mental health, for example.
Yeah, you've got 2 providers now that also
one.
include it as critical illness payout, which is fantastic. But I think, John, I agree with you. It's not a either or situation. It should be primarily potentially looking at income protection, yes, then adding on critical illness, yes, then life assurance. It's about doing multi-benefit. I mean, 58% of our policies are multi-benefit.
Yeah. This is what a specialist does, though, and this is where I think they really dig down and get to understand the know your customer scenario, to really understand the client's better work benefits, their income from other sources, for example. And I think that they should complement each other in almost every instance.
Okay, Tracy asks, what do you do with clients who have medical conditions that most insurers will not insure?
You do your job properly and you ring up and speak to the underwriters and see which provider will offer protection.
In every instance, without fail, if we've got a client with whatever medical disclosure it is, even if we think we know we're right, we will sweep the market entirely on every product to pre-underwrite it, to ensure that that client is going in with their eyes open, understanding what the outcome's potentially going to be.
You do have to do that.
Yeah, you do. And if it's a client where they're not insurable, where most insurers won't insure, you tailor it to a provider that does, or the one that if there is no provider out there that offers the client cover, well, you've done your job.
You can't. That's the thing. I mean,
you can offer an over 50s plan, for example, couldn't you? Right, where it's not underwritten, but they're few and far between.
there are more providers coming into the market, such as MetLife and things, that are offering more protection-based products which aren't relating to medical history, so to speak. But you know, the sad thing is that it's the people that have had a medical condition that their desire for protection is so much more, because they understand the need.
Absolutely.
So it's difficult. I mean, nowadays, you know, the amount of clients we've got where there's history of mental illness or diabetes or high blood pressure, there are providers out there that will still offer the protection to them. They might pay a little bit more for it, but our job as brokers is to speak to those underwriters, get it pre-underwritten, and see who's going to offer them the best policy. You've also got, you know, websites such as Underwrite Me, which are really great for pre-existing medical conditions and things now. So I think it's just overall knowing your client, asking the right questions, finding out what medication they're on, and then moving forward and speaking to the providers.
Yeah, I mean, people like the Exeter have come out and have taken over the that impaired life product.
Yeah.
Superb
Great.
offering, and do you know what?
For high BMI is fantastic.
It's superb,
Yeah.
really, really good. And I think that there are providers out there that are stepping into that market, taking higher risks. All right, the premiums are loaded, but you speak to the client that's had a medical condition,
And they're happy to pay
the
for
propensity
it.
to buy is far higher, absolutely.
Okay, and then I think we've just got time for a final question from Jason. IP cover needs to be more affordable for a wider market. Agree? Disagree?
Providers are making it more affordable nowadays, like with the Exeter, age-related policies, income one, things like that. You know, providers are trying. They are trying to find ways of offering more protection to more people, because we all, in this industry, we all understand the need and we all want to make sure that these people are protected. But unfortunately, we have cases where a client gets really upset because they're not going to be covered for a pre-existing medical condition. But it's like, we can't give you cover for something you've already got. And that can be the same with income protection. I mean, it's unfortunate the likes of builders and scaffolders and, you know, class 3 occupations, premiums are high, but that's because they're more at risk and they are far more likely to claim. And insurance companies aren't charities, so as much as they want to be more affordable, and they are trying, it is a business option.
It's a risk profile, isn't it? It's price to risk, absolutely.
Yeah.
But I think the providers have done a very good job in opening up the market to lots more occupation classes. I know quite a few providers have just had a bit of a rejig in that. So to be more affordable, you tailor it to your client's affordability, right?
Yeah.
It's not a straight no. If you go and offer them 65% of their net income or 80% of their gross income from Zurich, right? And it's not affordable, you don't then all of a sudden turn it down. It's not a no.
You work to their budget.
Absolutely right. You make it more affordable for them.
I'm a little more critical on on pricing. I think there is something that can be done. I do get that obviously with something like IP, the claims experience means that more often than not they are actually going to pay out, so they have to take that into account. But I do think there's something that can be done there. But it's just a time. You're right. It's just working to the client's budget is really important. And if they can't have everything, then maybe they can have a little. And
It's better to have something
building in the
than nothing.
multi-benefit. That's much better. That's how it has to work.
Okay, I'm going to squeeze in one more question, but it just has to be a yes, yes, no, I'm afraid. So this is from Stuart Gregory, who says, we always see the notification within mortgage offer documents for applicants to ensure that they are suitably protected. Should lenders be allowed to make this a condition of the mortgage?
It used
It's
to
not
be.
that black and
It
white,
used
is
to be,
it?
Stu.
It was, but it's unfair.
No, they shouldn't.
You can't, sorry, I know Stuart, we've got no time, but it can't be that black and white because of pre-existing medical conditions. BMI, diabetes, whatever it might be, it can't be that black and white, unfortunately.
Or the odd occasion where it's not required. I know they're very few and far between, but you can't throw everybody into the same bucket.
No, I agree. Yes, I remember when it used to be mandatory, but
This wasn't TCF.
It's really, really difficult to enforce, and that's why it stopped becoming mandatory. Lenders don't. How do they keep checking that's the case? That it just has to be our job.
Okay. Is that all we've got time for?
I don't know, you tell me.
Well, I'd like to thank you all for coming and spending your time doing
Thank you.
this. And I would also like to thank all the people who sent in questions and comments. The only reason we didn't ask all of them out was because of time limitations. So I think we'll have to end here. You'll soon be able to listen back to this fascinating discussion exclusively on the Value Exchange website. And I'd like to thank you all for taking time out of your day to watch this. And hopefully we'll catch you next time.